With £100,000, investors can introduce a lot more positions than a £10,000 or £1,000 portfolio. As with £10,000, investors may consider a core and satellite strategy. The percentage split between the two is typically 70-30. For the core of the portfolio, it's worth considering global funds and other developed market equity funds alongside low-cost, passively managed multi-asset funds. Global funds, actively managed by a professional investor, provide investors with plenty of diversification and the potential to outperform the wider stock market. However, there are no guarantees. There are also plenty of low-cost index funds and exchange-traded funds, ETFs, that track global stock markets and other developed markets, such as the US, UK and Europe. For satellite holdings, £100,000 gives potential for a greater number of positions, so there's scope to add a small amount of spice in racier, higher risk funds in the hope of generating higher growth. Some funds specialise in a certain sector, such as technology and healthcare. There are various adventurously invested index funds and ETFs that invest in specific themes, including cloud computing, robotics and automation, and clean energy. These funds can potentially be held alongside other adventurous but less exotic funds, such as smaller companies and funds that invest in the emerging markets.